boys and girls, you might click on this video because you have FOMO right now. Because if you're looking into the S&P 500, you see that we just did 24% since the recent lows. But let's talk about FOMO. This is one of the most not desirable feeling as an investor that you can have, that you fear out. You have this fear of missing out in the new lows. But I will give you 3 categories today why you shouldn't feel that bad. For once, the stock market don't go in a straight line. Second, the economy is beat up pretty bad. And number 3, the valuations are sky high. And therefore, without further ado, let's roll. If you're new here, make sure to hit that subscribe button and the bell next to it, and also the like button for the YouTube algorithm. You know the game. However, if you saw this crash, there's 2 feelings you could have. For once, it's fear about your portfolio, the uncertainty, what will happen to our world and economy. There's this funny picture out of the dinosaurs that the comet is rising towards Earth, and those dinosaurs are asking, hey, how this will affect my stocks? Now, don't worry, the federal bank has covered you as with the biggest money printing measurements ever, and this is currently stimulating the stock market. Otherwise, I have no explanations why we have these levels. Now, number 1, think always about that the stock market don't go up in a straight line like we see right now in the S&P. It's basically one straight line, and this is not normal. A stock market usually have up and downs like a roller coaster, and if you know roller coaster, they have like a highlight. I would call this the bottom. The bottom, to predict the bottom is impossible. So not even Warren Buffett, who thought in 2017, 2018, 2019, everyone thought that he knows when is the bottom, but even his prediction to buy American stocks in October 2018 was long known the bottom. But the bottom came just 5 months later in 2009. So as you can see, not even the best investors of our lifetime can predict the bottom. Therefore, you should not consider to see how to time the market, because this is impossible, and the stock market will go down for sure as well, even not maybe to the recent lows, but at least a couple of percentage, because this is investing, guys. Let's talk about the economy for a little bit. So if you see the economy, I mean the unemployment is sky high. Now we see that there is so many businesses affected, not only the big businesses that are all over the news, right? They need billions of dollars of bailout. They need new structural loans that are forgiven afterwards, and to hold this many people on the payroll. And this is obviously a very bad situation, maybe a situation that we hadn't so far yet experienced. And people are saying, when this will be over in a month, I will just go out and have my life and the stock market will go to new highs. But I very much doubt, because if the people will go out and they will see, hey, I actually don't need to go so often to the supermarket. I don't feel to go to the restaurant, and the restaurant need to have social distancing. And until we have health measurements, we will not see the economy how we saw it before. And therefore, I believe this will drag the whole stock market to a reality which is way down from here. Why? Because the valuations are absolutely skyrocket, incredible, unserious, guys. So we are currently at valuations that we will discuss in a minute that are peak valuations, okay? If everything went well, if Tesla would deliver, millions of cars, if Daimler and Boeing and everybody is making a freaking party, but this is absolutely not the case, and therefore I believe this will bring stocks down to a real value. Where does it is? I have no idea, but even if I'm not giving you exact timings and exact values, I can give you a direction, long-term and short-term and mid-term. So I believe short-term, we definitely will see a couple of downturns, in the next couple of weeks and months. Then mid-term, we will balance somewhere to find grounds. This can be months, this can be years. It's all depending on the news, and therefore it's hard. It's not serious to give any type of predictions, but long-term, I can assure you that at one point of time, in a couple of years, we will look back and we will say, hey, how sweet was that when the S&P 500 was still at 3,000, such a bargain, because now we are at 10,000. So let's talk about valuations. The valuations are the measurement that people are using inside the indexes to see how expensive are indexes. And if you are looking into the valuation of the S&P 500, you see an approximately valuation of 19. This is based on previous earnings, and we shall see slight adjustments to that. I believe we can see 20, 30, 40% of adjustments to these valuations towards up. So we will see a bigger PE ratio on the S&P 500, and we shall see then that people will say, you know what, at this point I think stocks are a little bit expensive and I will go rather for some other investment vehicle, or I will go for bonds, or I will go for equity and short bonds for corporate businesses. This is, for example, some corporate bonds that are secured by corporate equity. So, for example, you give money to the company and the company cannot pay you back, they will pay you back in equity, and this is beautiful, right? And some of these companies I just talked about in one of my latest vlogs are having beautiful conditions to raise money, like for example Slack. And if you compare it to the RMB, which is totally affected by this, is absolutely ridiculous which terms they have to agree on. But in the end of the day, think about what is your goal on the stock market. Is it to make short-term gains? Then I can tell you this is reserved for some of the best traders worldwide. If you want to make long-term gains, this is pretty easy, and even you or me can do it, and therefore just see how the whole stock market will change, how the people will consume and live in the future. Zoom, Amazon, Shopify, this kind of internet businesses and future businesses are the new trend, and their evolution towards this is now on the speed track, because we get pushed to a more digitalization of our world, of our economy, of our communities. Maybe the next meeting in a couple of miles, 100 miles away, we should not drive there and use our car and, be unsustainable to our nature. Maybe a Zoom call will be fine, right? So this is how our behavior will change. It changed after natural disasters around the world. And it changed for example, events like the 9/11 in New York. So things are changing with drastical events. Therefore, this is the conclusion of this video, to make sure you have your goal for the stocks and the stock market. And I believe that you always should be convinced by those trades you do. Now it's a very hard environment to go into the market. They are just hand-picked opportunities that I, for example, talk on my live stream. So make sure and to go after this video not only and subscribe and like this video, but also to see one of my live streams. I'm doing them almost every single day, and there you can learn a lot how to analyze stocks, how to go for the next step, and which opportunities we have right now on the stock market. So stay tuned, and never forget, the stock market is a market that will transfer the money from the impatient to the patient investor.